because what pushed me out of the job that I was doing into the business that I do was losing my marriage.
Is it your passion? Is it just wanting to do more with yourself? What was it?
You see, when you have children and when all the bills are on you, you really have to think and think fast. The one main question that we don't really ask ourselves.
What is the most money you've made from these bonds?
It's all in your mind.
Welcome to the podcast where we bring you exceptional journeys of women who inspire, uplift, and redefine greatness. My name is Joy Mido, and today I'm joined with a very special guest. Her name is Angie. We'll be getting to know more about her in the next few minutes. Welcome, Angie.
Thank you so much for having me, Joy. And that's a beautiful name, Joy Mido, very catchy.
I'm so happy to have you to share your exceptional journey with us and all the milestones that you've had in your career.
Thank you for having me.
Let's dive into it. Something that you guys would be very, very interested to know about is we actually went to the same professional school. We studied the same course and we scored the same marks in university. I mean, if this is not a coincidence, what is it?
I didn't know we went to the same school.
Yeah, we went to the same school.
How do you even know what I scored in school? Like, you must have done your research really well.
Oh, I'm well prepared.
Oh, wow. Yeah, that really caught me off guard, but wow, amazing.
Yes.
Yeah, of course, you caught me off guard. I was like, which school? No,
I was like,
which school is out college? We did visions.
Imagine, okay, so this is Kenyatta University for the degree, of course, the bachelor's. I did bachelor's of commerce and I also specialized in finance.
Oh my God.
Then I also went to Visions for my CPAs. However, I did not finish for some reasons known to myself. But I got to CPA 4 and I see you're a CPA K, so much to learn from you today. And actually you got a second upper class honors similar to you. So this is a vibe match in heaven, right?
Interesting. Then maybe she'll be the one on this other side talking about what I'm about to talk about. But oh yeah, that's pretty much impressive. So yes.
Introduce yourself, Angie.
Wow. At my age, memory is something we really struggle with. And I'm thinking, okay, my childhood, those were many years ago, but let me see. So Angie is Angela Karaoke, a mother of two beautiful girls, 15 and 11. And Angie is also a financial advisor and educator on matters investments. And I specialize on Treasury bonds investment. I used to be a Treasury bonds trader for some time before I got into business, and now I'm an advisor and educator. Angie is also a business lady. I run a boutique by the name Angie's Closet, where I dress the modern woman in elegance. And I deal with mostly official wear and business casual wear. So Angie is many things, but Angie is a lover of life. And I love talking to women and uplifting and inspiring women and helping women be better their lives. So I'm really thrilled to be here to be sharing my life's journey. Being a firstborn and the only girl, it comes with a lot of responsibility. Coming from a normal family, not well off per se, just a normal where you don't lack the basics, but you're not that rich per se. So I did a lot of helping. I did a lot of maybe mothering to my younger brothers, because now being the firstborn, there's some things which are expected of you. And at some point in life, my mother became was very sick for some years. And I had to step in and sort of become the deputy mother. So looking at that, I had to sort of just help out raising my brothers in one way or another. It's just that I think that has made me who I am as a deputy mother and grow up much faster, because, you're required to step in and be the voice of reason. And, you have a school where you need to perform well. You have younger brothers, you have a sick mom, you have a dad who's trying to support all of you guys. So I think I just had to mature faster than my age, and I think that has shaped who I am today.
Oh, lovely to hear, and so sorry to hear about that. Maybe just your experience, just supporting your brothers. How did that feel for you? Because mainly we're known in Africa, and I think the world at large, it's known that the men are the providers of the family. So for you, how did it feel? Did it feel like you've been given responsibility that was just too early, or were you just ready to take it on and run with it?
Being a firstborn, again, you don't know any better. So when you're put in such a scenario, to you, it's normal. So there's nothing to compare it with. So you just take it up and feel like that's the only thing you're supposed to do. So I remember my youngest brother, the last born, and at some point I had to cook and take care of, being the firstborn. I didn't feel some type of way. To me, it was just normal upbringing. To me, that was expected. To me, I didn't know any better. And I wouldn't say they were a burden to me. It was just the normal life whereby you chip in, you come in and help your mother in raising your brothers. But I'm glad because in as much as my mother was sick, she was still doing the best she could. And she was there for my brothers as well. So it wasn't really a burden to me. It's only that I really had to grow up and mature fast. So after I cleared school, a lot happened before I actually went to bonds. So I got married and then I got my first baby. And then I quit my job because 15,000 and I had a husband to support me. I was like, I need to be at home to raise my kid.
Yes.
You can be giving me
I will not
50K.
suffer.
I will not suffer. And I'm just pregnant with my first
Right.
kid. So I went back home and should I say it's one of the life's mistakes that I made.
All right.
You don't get a job and quit your job to go home and sit. So fortunately or unfortunately, it was really hard quitting my job and raising a kid and new marriage. But luckily enough, anyway, after the baby came, I was able now to get a job now as a Treasury bonds trader with one of the agents around. Then moved from one agency, then to one brokerage firm, and then to another where I worked for like around 7-8 years. And then I retired.
Wow, imagine retiring at 21, just 21. Teach me your ways.
At that time, I was like 20, some late 20s.
Amazing.
By that time, I had really worked for many years. So by the time I quit my job as a treasury bonds trader, I was in my 30s. I was in my, I think, early 30s. But then I was quitting now to get into my business, to try out my hand in business. And that is when Angie's Closet was born.
I'm just imagining, how was it like for you, especially now that you have no income coming in and you're trying to raise your kid? Of course, you have a husband, but just you as a person trying to think outside the box and starting your own business. What pushed you, and is it your passion? Is it just wanting to do more with yourself? What was it?
My life, I keep saying someday I'll write a book because my life has a lot. Because what pushed me out of the job that I was doing into the business that I do was losing my marriage. So I got a divorce. And I had now to transition again from the job by quitting the job into a business. So what pushed me is during that whole divorce time,
Right.
it's not the best of times. Wow, it's something else. Dark season, that one.
Oh, I can imagine.
And what I looked forward to was dressing up and looking good. That was the one thing that I was really looking forward to. By that time, I had my second child. And but I couldn't really focus on the job that I was doing. So I focused on looking good, and people started telling me how good I looked. And they wanted to know where I used to get the clothes. And I was like, okay, let me start a page. Facebook was new. Social media was new by that time. So I do a lot of posting on my social media, dress up and just post, dress up and post. And it will make me feel good. It helped me transition during my divorce season. And with that, I felt like, okay, maybe I need to change what I do into something that I'm more passionate about because I had so much passion in looking good. And that transition now created my new business, Angie's Closet, which again I've done for the last 7-8 years.
Wow.
And 7 is my my number for doing
I
things.
think so. It's your lucky number.
It's my lucky number.
Yes.
So now I transition fully into running a business because it was very. It needed me to focus on that business. I mean, for any young business, you really have to focus on it.
Right.
So at first I started by dealing with the two: the employment as a fixed income trader, and a business lady. But now I couldn't sustain the two, so I had to quit one and just focus on my boutique, Angie's Closet.
As a single mother, how hard has it been balancing just your business, your hobbies, your social life, and your kids as well?
Very, very hard.
Impossible.
Well, not impossible. It's doable. It's doable. I'd say there are good days, there are bad days, there are very hard days, there are very happy days. It's just a mixture. Again, it's my first time being a single mother. I don't know any other life.
Yes.
So to me, it's just normal life. Sometimes it gets really, really, really difficult. It's hard trying to do it all and to balance it all, the business, children, your own life, and sometimes
Family.
Sometimes you almost lose it.
Yes.
There are instances where I've almost lost it. But friends and my social media audience, amazing. You know, guys are like, that's an illusion. The social media people are not even real. Hey, they've come through for me in an amazing way. Like, wow. They've been amazing. They've been very supportive. Even someone randomly DMing you or just asking to call you and encourage you. So it gets done. It's doable. It's hectic, but it's doable.
It's doable.
Yeah, but well, on most days we are happy.
Yes.
Yeah,
which is a good thing. I like asking, how is your heart? Are you happy amidst everything?
It's beautiful.
It's beautiful.
If there's something I am, it's happy. I'm very, very happy and at peace. So it's a beautiful journey. Again, no one told you it's gonna be smooth. And the fact that, I mean, single parenting is not the only challenging thing. There are people who are not single, but they're facing so many challenges in life. So it's not about even at the single parenting. It's just how life is. Life will throw you a curveball every now and then. It's how well you deal with it. So it's not a thing about your situation. Everyone has a situation to deal with, but how well do you deal with your situation? If you decide to throw a pity party on yourself, then
and wallow in that pity party,
you'll stay there for a while. But if you decide, you know what, bring it on, let's do this, then it becomes doable. So most of the times I'm missing it just fine. I'm happy.
For ladies who are trying to join the fashion industry, question is, does it pay? Because we see so many people trying to venture each and every year into maybe different kinds of dressing, corporate. I've seen it come a lot, especially this year, last year. And I'm trying to wonder, does it actually pay the bills? Does it put the chicken on the table?
I love that. You know, so many people are like, hi, Angie.
Okay.
Tell us it's this business that pays. You tell us, who is this behind you?
Tell us.
You know, anyway. So let me start with the transition. No, you don't really just jump into a business. That is taking a huge risk. And that is why I did both at the same time. I was still an investment banker and a businesswoman at the same time until it got to a point where I felt like one will suffer. So I have to decide which one will suffer, the investment banking or my business. And that is when I decided, okay, by that time, of course, it was making a bit of money. And I felt like if I gave it more attention, it will be able to take care of my bills. However, I had savings. Through my investment banking, which was a very good job, I had managed to get some savings and some property I had, which I had to sell to liquidate, which was able to sustain me and my young children for a while before Angie's Closet could actually take care of bills. But does it pay? Yes, it pays. Now, the thing about business, many people want to run business as a side hustle. Now, if you keep doing it as a side hustle, it will keep giving you side
Hustle.
profits, side hustle profits.
Correct.
You really have to pour your all in whatever business you're doing. The best thing I do for my business is that I'm very passionate about my business. If you know how I run it, because I post about it on my social media platforms, I'm really passionate about it. It doesn't feel like a business. It feels like, you know, the way they ask you, if money was not a problem, what would you do? Trust me, I will run my business because it's about dressing up. I still model. I'm the face for my business. I model for my business and I love doing that every week. Like I'll just wake up to dress up, to try out different pieces and see how
that.
one looks. So that one is a great component of any business when you're passionate about it. You know, guys are like, you're being a motivational speaker. But no, passion really drives a business. And it has sustained me all these years because if I wasn't passionate about business by now, and especially now when things are thick, I think I'd have quit. But I love it so much and I have a great team. There are many things that I've learned about business, and having an awesome team is one of them. So how do you get an awesome team? It's just how you treat them. Make them part of the business and they will make your business part of their business.
I love that.
So there's some things I've learned and I've been able to survive all these years. I have my challenging years. Last year was a very challenging year for me as business. It's the lowest I've ever had since I started operating. I don't want to blame the economy, but I'll just say a lot was happening. But that is why I started again something else, another brand that I call Angie on Bonds, because it has cushioned me. You see, when you have children and when all the bills are on you, you really have to think and think fast. And when you love life like I do, because I love life, good life,
Yes.
then you really have to think fast. So at some point in running this business, I had to do investments all over again, to redo my investments all over again. Remember, I'm starting this journey when I'm married, we are making money, we have some investments. And then midway, I am alone and I have to rethink some of these investments, what to do with them. So I really thought fast and rearranged my investments and got into bonds investment. And the coupons, that is the return that bonds pay, has come in really handy in cushioning me during the ups and during the downs of running the business. So it's just up and down and just trying to figure out life, whether it's in employment or in business or now what I'm doing, which is consultation or advisory on investments, treasury, bills and bonds to be specific.
So Angie on bonds. Yes, Angie on bonds. So tell us, where did your love for government securities come from? Because I know people listening to this are like, government manenos, I do not want it. So Angie, tell us, bonds. Why? Why bonds?
Why bonds? I'm those people who flow with the flow, and clearly the flow has gotten me into bonds. So why bonds is because among the investments that we were holding, or let me say what I was holding as per the time I started doing life alone, some of them were not working. I realized I'm holding on to things that might not help me now, yet I need the money now. I live for now. By the way, that's my life's principle. As I wait for a better tomorrow, Mimi, I live for now and I want the best for now. And I realized there's a lot of unlearning I need to do. There's a lot of learning things we were told growing up. When you were starting work or when you get your first salary, when you start making money, you have to invest in land, you have to get rentals, you have to get into circles, you have to get, all those things.
Right.
So I was in several of them, but I sat down and thought, okay, Angie, what exactly are you doing with these? Why do you need to hold on to something to sell? I don't know, when your kids are going to college, you don't even know whether you'll be there. So how does that even help me?
Right.
So I redid it. The investment now. And when you're alone, one of the advantages that I've had by being a single person, a single parent or a single lady is I've had to take risks in terms of think of something and actually do it. And if it doesn't work, then it's on me. And I have some things which have failed. Then I go back and think, okay, what else can I do? So in the process of doing that, I reorganizing my life and my investments. I was like, I knew about bonds because as an investment banker, I used to be a treasury bonds trader, but not an investor. I never invested in the bonds. I was just a trader, which is just trading of bonds, but I never touched them myself. So I thought, okay, I understand them very well. Why can't I invest? So I started the journey of bonds investments like 4-5 years ago. And I knew exactly how they work. And I was like, why didn't I think of it from the word go? So the bonds worked very well. I started, there's a way you can structure bonds investment such that you can get a coupon or a return every single month. So I knew I had to set up a passive income. That is the income which comes to your bank account, whether you're working or not. It comes when you're sleeping. So I set up and I started receiving now my coupons every single month. And I was like, wow, this works really well. My money is still intact, but I'm able to enjoy this money every single month. Yes, I still have other investments because diversification is key, but I'm able to actually earn from my investment now. So my children are able to live well now. So we don't have to wait for, 20 years, then we can do, I don't know what. And I thought that works really well. And as usual, because I'm all about inspiring and helping another woman or man out there, I started talking about them on my social media. And the more I spoke about bonds, I realized people actually don't know about bonds. And it felt bad because at one point I reached out to a friend who was like, these bonds, I've heard about them, I don't know. Then I reached out on DM and told her, she's called Amakovi. And I told her, Amakovi, you don't know about bonds yet. I'm a bonds expert. I can teach you about all this. And she asked me, how comes you don't speak about that? And that really challenged me. And I opened a page, Angie on bonds, and thought, okay, my way of giving back to the community, at some age, we keep thinking of we need to give back to the community. And I thought, as a way of giving back, let me just talk about bonds and teach people about bonds investment because it works really, really well. And let's say the rest is history because the page has been growing, the brand has been growing, and I've been advising people on one-on-one basis. I set up sort of a farm and I'm able to help groups. I'm able to speak to forums, to corporates. And you never know what the future holds. Yes, I'm getting a lot of, na hii serikali, who is giving nani money? Hey. But you need to understand what bonds are, how economy works, what's the structure, who are the buyers of these bonds. Because you can't tell me you'd rather have your money safe in the bank instead of touching bond. Then I'll tell you, part of your money in the bank is actually in the bonds.
Right.
So once you understand what these bonds are and how the economy works, then these fears, you're able to take more risk. And once you understand that an investment like bonds carries like one of the least in terms of risk, as opposed to all these other investments you're talking about, then you're able to actually get into it and invest without fear. It's just understanding. It's just information that people are lacking. So yes, whatever is happening in our economy, in our country, let me say in our country.
Yes.
It's not unique. It's just how economies work. It's just how, you've seen these in other countries. But once you get to understand the basics of what bonds are and how the basics of economy, then you can easily invest in bonds without fear. To me, it's one of those things that has really worked for me. And I'm determined to keep spreading the good news about the bonds investment because...
So our parents just brought the mentality of if you're investing, you have to invest in land. And I think I saw one of your videos that you're talking about Maguta, that many people, the instant you touch money, you go look for akashamba somewhere, Nanyuki, here I come, Naivasha, you start investing in a land. So what would you tell us about maybe someone who's trying to invest in land and bonds? Which one carries better weight?
The question I always get, where do I invest? Do I go do bonds? Do I do MMF? Do I do... Now, the main question is, what do you want to achieve? The one main question that we don't really ask ourselves, what do we want to achieve? Investment is not just investment. No, money is really a mindset game. Money is just an energy that flows. Please note, I'm not a motivational speaker, by the way, but money is an energy. And if you don't know what you want to achieve, you will keep going round and round with money. Money will keep passing through you because at any one point you're touching money, you're making money. It's not like we don't make money. You see, there's active income, there's passive income. As long as you have a job, whether it's business or you're employed, there's money coming in. But at some point, you're like, where did the money go? Because you didn't direct the money, tell it where it's supposed to go. So it's a thing of what is your objective. That way, you can know where exactly to invest, whether it's in the real estate in terms of land or rentals or SACCOs or money market funds, which has become a fad nowadays. Everyone is on MMFs, money market funds.
Suspects.
Or bonds or bills. It will all be guided by your goals. You see, like I'd say, my main financial goal in investments is to have a good life, to have my holidays. I take my holidays.
Yes,
I love
absolutely.
traveling. I love traveling.
Self-love.
Because what there is, what else is there to do?
Yeah.
You're paying bills, and life is not just about making money and paying bills. And then what? So at this point of my life, I'm like, I just want to travel. So that as my main objective tells me that I need to have money at specific months to meet that goal. So I need an investment that gives me certain amount of money. Again, you have to have the figure in mind. So what do you want to make? Because what I've seen, we just invest without even calculating whether we are making a profit or not, whether we're making a positive return or not. Joy, do you know you can be making a negative return? You can be having a return, but it's negative return. You need to know what percentage you're earning from your investment. You need to know where inflation is, because inflation is what eats up your investment. So you have to know where it is. So if you have an investment that is close to inflation, you're doing a lot of, you see the way you have hot tea, 2 cups, and you're trying to cool one, that thing of fresh chai. That is what you're doing. So you could be doing a lot of investment, but doing a lot of zero work. That's what people need to understand. So first, know what do you want to achieve? And have the number in place. Like how much do you actually want to achieve and in what time? That way, then you're able to tell, are you supposed to go to bonds? Are you supposed to go to land? Are you supposed to go to MMF? Diversification is key. It's very important. Don't put all your eggs in one basket. But then again, do not over diversify, because if you over diversify, that tells me you don't understand the investments you're doing. So you're just throwing your money all over the place, which can be a very costly affair, because there's management of all these things you're investing in. So if you're not careful, you'll end up with very many investments with nothing much as a return. And that is what most of us end up doing. So what are your financial goals? From there, I can guide you on what do you need to pick. Not because any investment is wrong or bad, but it might not be what suits you.
Right. That's a very good way of putting it. I think I'm also learning a lot actually here. I think I need a notebook. However, you've talked about active and passive income. What's the difference between the two? You mentioned passive income. You can make money when you're sleeping. I know we really are interested in knowing that. Do you make money when you're sleeping?
Yes, you make money when you're sleeping, because like for me, I can decide not to work for several months, and I'll have my coupons checking in.
Oh, amazing.
Yes, but before that, you really have to put in work beforehand. You see, the active income is what you really have to be involved in doing. You have to wake up and go look for that money to make that money. So that's employment, that's business. If I don't go to my business, I won't make money in that business. But if I don't need to do anything in bonds or something like rentals, you don't need to do much, just the management and all that. You don't need to do much. So the passive is that which you're not directly involved. It's not like you do nothing. You actually do a lot, because you have to build it before it can start giving you a return when you're not really actively involved. So it's more of it's actually your involvement in that which gives you money. So if you find yourself with something that you have to be involved in, day out, then that's an active income. Passive, you really don't have to be involved fully. You just have to go in every now and then and out, but your return keeps coming. And that is what builds the real wealth. That is, I mean, you've heard of rich people and wealthy people. Now, wealthy people have good amount of passive income coming in. But rich people, they can be rich today because the active income is there. But if something happens and you're unable to work, then the source of income just katicas and you can no longer make that income. So it's good to, as we're able to make our active income, you should be able to channel it into investments that give us passive income. That is the real wealth.
Yeah, that is the real wealth. I love that you mentioned something on just managing the money. I'd like to talk about middle class and how we middle class people, when we touch money, sometimes we just feel the urge to, do something, go somewhere immediately. Investments or savings are usually maybe somewhere at the back of our minds. So someone somewhere told me the middle class were taught how to make money, but they were not taught how to spend money. Would you think, in your experience, do you think it's actually the truth, or what do you think?
With a background of finance, it's very interesting because we learned about all the investments we have, but that was theory. Now, applying it is something else altogether. So in school, we learned about how to make the money. Now, through schools and a bit of life, we learned how to do the savings. But that is where we get to. We never really get into investments. And in terms of investments, we are very limited on where we invest. We all go to for Buroti, Maguta. That is where we go, all of us. Yeah?
Yes.
We never really we never got to learn how to invest. So do we know how to make money? Yes, most of us by now know how to make a shilling or two. Do we know how to save? Yes, and especially women. Women really save. But the problem comes in when it comes to investment. Understanding what investment is and what saving is and what the making money is, because those three are very different. You have to get to the third level of actually investing so that your money can make you money. Now, the money that your money makes is what you can easily spend without feeling any uchungu of spending that money.
Yeah.
I see guys saying, no, you can't, I don't know, you can't splurge, you can't use your money to buy expensive things. Why not? You can. But be careful not to overindulge using the money that you're making. You can overindulge in the money that your money makes. So you have to get to that step of investments, the passive income, where your money is the one earning you. Yani, your money is your slave. So you send your money to make you money. Now that money is what you can spend any way you want. But if you keep spending the money you're actively making any way you want, and then life's ups and downs happen, you can find yourself stuck. And we have found ourselves stuck once in a while. Why? Because we keep using the active income. We have to really convert the active, channel it into savings and into investments, then use the money coming from that passive income to do whatever it is that we want in our lives.
I love that. I am supposed to be making money when I'm sleeping at this age that I am in. But speak to us who are almost turning 30 or over 30 and just starting to figure out maybe what is the best investment right now. Do I need to do a bond or a bill? And also explain to us what is a bond or a bill and what is their differences.
So what is the best thing to do? Where is the best place to invest? I'll throw you back to what are your goals? Once you identify your goals, then you can decide where exactly you need to go. However, it's good to know the different investments we have. So I specialize in bonds because that is what I have expertise in. I've traded in them. I've been an investment banker in bonds for a very long time, so I understand them. And they've been working for me. Now, as an investor, I can reap the benefits very easily. So bonds are a loan to the government. Yes, you can actually loan your own government. Hii serikali, to me like that. This serikali of ours, yes, you can loan it. So they keep borrowing. Why are they borrowing? Because they're a business, just like any other business. Government is run like a business. So they need money. Yes, they collect money from the taxes, but are the taxes enough? No. And of course, we know where some of
Why?
because it's not enough and they keep borrowing. So they can borrow externally through the likes of World Bank, IMF, and the likes. They can also borrow domestically through treasury bonds and bills. The only difference between the bills and bills are short term, and the way in which they pay their return, they don't pay the coupons like the bonds. You buy at a discounted price, then you get back your full amount during maturity. But on bonds, once you buy, you receive a simple interest every year. It's calculated per year, but it's paid out every 6 months. So it's as simple as that. You're giving your government a loan, and it pays you a return, what you call coupon, an interest. That is what it's paying you, called coupon, which is calculated per year, but paid out every 6 months. Then on maturity of that loan, depending on what you'll agree with the government, there are things called prospectus, which where it has all those, it's like the contract now you have with the government. So after maturity, they give you back your money. I know the next question will be, do
Yes.
they really return the money?
Will they return my money? Is there an instance your money has gone lost somewhere in the clothes?
No, as a country, we've never defaulted.
Okay, good.
Bonds. So I've never lost, but no one has ever lost their money
Okay,
in bonds. Whether
that is
it's in
positive.
bonds or maturities, no one has ever lost their money in all these years. It's nothing new. It's been there for very many decades. It's really nothing new. It's how governments operate. It's not unique to Kenya. All other governments do the same because they need to borrow to bridge in the gap between what they are collecting and the much they need for the development or for the. Remember, it's a business. The government is a business and it needs to survive. It has bills to pay, it has projects and all that. So they need to keep borrowing. So it's nothing unusual. It's just that we just need education on that to understand what these bonds are. And who are the main investors in bonds? Banks are the main investors. Where is your money? In the banks, Indio?
Yes.
So part of that goes directly to the bond. It's because they understand the system, the economy, the bonds better. So that's why most of the times you'll find the banks, the pension firms, the fund managers. When you keep talking of MMF, most of the money is also in the bonds and bills because it's the main place where they can invest that money and the safest. Where they can invest. They can touch on other things like real estate, but real estate has its own risk. But the safest bet those big firms have is in treasury bonds or government bonds. So once you understand that, then you'll know that your money is somehow safe. The risk is quite low.
Take us to the coupons. How much money am I getting for investing in the government?
So the coupons range, they keep fluctuating. Just like any market, the rates keep fluctuating, but the coupons are fixed. So we have different bonds in the market. There's so many of them, and they keep maturing, of course, and new ones keep being floated. So the coupon is determined at the point where that bond is being auctioned. There's an auction that happens. There's a process of buying that bond where the government, through Central Bank of Kenya, CBK, floats a bond. And when people buy and there's a whole bidding process, then the interest, which now we call coupon, is determined, which is fixed. And that is the level you continue earning for the rest of the life of that bond. So it varies. There was a time we had bonds at 10%. We still have them 10%. Then as of last year, the rates went all the way up to 18%. So we have a bond that was issued at 18.46%. An infrastructure tax-free bond. By the way, we have bonds which are tax-free, the infrastructure bonds. There are two types of bonds. The FXD bonds, which are taxable, either 10% or 15%, depending on the duration, and the infrastructure bonds or the IFBs, which are tax-free. And what is tax-free is the return that you're getting from it. So the rates had shot all the way to 18.46, and now the rates are going back down. So right now the rates are around 14%. So it varies. So it depends at the point where you start investing. So like in my portfolio, I'm holding some 12% coupon bonds. I'm holding 18% bond. So they vary because they're different bonds in the market.
So when you say 18%, you mean per annum?
Yes, it's per annum. Yes, it's always calculated per annum, but paid out twice.
Or twice in a year.
Yes.
So that's half through the year, then.
Yes, then the other half, yes. And the dates when the coupon is paid is usually stated in the prospectus, which is issued during the issue of that bond. So you know exactly when your bond is coming in and exactly the amount that you will receive, because it's based on the amount of bond that you are holding. So that makes it easy for your planning, again, depending on your financial objectives. So it's
Right.
money that if you need to plan for a certain amount at a certain time, then you know exactly how much coupon is coming in on which day, and it comes in on that exact day.
I was going there with my next question. Anyway, you mentioned we have bonds that are tax-free.
Yes.
And we have bonds that are taxed. So maybe someone who's watching is wondering, again, I'm paying tax from my money that I've invested in the government. Why, Caesar?
Well, because for any income that you make, it should be taxable by rule. I mean, it's just by law, it's just how it is. As long as it's an income, it's taxable. Yes, it's a loan to the government, but to you, see, it's an investment. It's not like you're going to help them. They are paying you and you're making an income. So that income is taxable. So why are the IFBs not taxed? It's because we're a developing country and we are really developing in terms of infrastructure. So to encourage the development of our country, they float infrastructure bonds which attract huge amounts so that they can do the project so that our country can develop. It's just an incentive to borrow huge amounts of money for the development that they need to do, just because our country is developing.
Okay. And what is the minimum investment that I need to have if I want to invest in the bonds today? How much do I need?
Just 50,000. You know, I tell guys, and they're like, just 50. I thought bonds was for millionaires.
I swear.
No, bonds are not just for millionaires. Bonds investment is for everyone. Anyone can invest.
Right.
And don't tell me 50,000 is a lot. Okay, it could be a lot to some people. But when you look at the amount you're putting in here and there and all over the place, you're able to put your money in one thing. I mean, just consolidate the savings once you hit a 50,000. And this to the people who keep saying, hey, but I only make, let's say maybe that 50,000 is what I make. But I'm sure you have savings. So that saving that you're putting at, let's say 2,000, then at 3,000, then 5,000, you can consolidate that. And you can consolidate in something like a money market fund where you throw it in. Then once you get to 50,000, just throw it in a bond. So the advantage of a bond is that you're locking it in an investment. When you talk of, again, some people ask, why am I not Angie on bills? I'm Angie on bonds. Because to me, bills are more of a savings, but a saving with a return, a good return. Because you can tell me you have a 3 months investment. 3 months is too short. 1 year, which is the longest T-bill that you have, is also too short for an investment. And the minute it matures, trust me, you'll have something that needs to be paid with that money. Definitely. You will not reinvest it.
True.
So I find T-bill to be more of like saving
Avenue.
mechanism, saving avenues. But for a bond, because once you throw it, it's very hard to sell a bond, by the way.
The government has made it difficult.
Yes.
Not to get your money back.
Yes, it's by design because one, they're throwing it into long-term investment. So they can start building a road and then you tell them, I need my money back. Where do you want them to get the money from? So it's designed to be hard to sell and it works as an advantage to you as an investor because you're meant to invest long-term. So you can't tell me 6 months is an investment.
Yeah.
No, that's a saving. So when I see people doing a lot of MMFs are good, they have the advantages, they're very liquid. But if you really want to invest, don't invest somewhere you can easily get your money out.
True.
Just build your emergency fund through the other options, investment options like MMFs or T-bills. But if you want to actually build wealth, then throw it in somewhere where you know it's not easy to liquidate that money so that it stays there and you're able to build it up. You can top up the bonds. You can keep buying 50,000 every month, every few months until you build a portfolio that pays you a good coupon. Again, some people are like, but that return is too low. How am I throwing in 100K only to get I don't know what amount? There's a law in economics where we say high risk, high return, low risk, low return. So bonds being low risk, the returns are also relatively low. But if you need to build your wealth over time, don't look for get rich quick
Yes.
schemes.
The pyramid schemes.
The pyramid schemes, that is how people are losing a lot of money. They're like, how can I be earning 10% per year, yet here I can earn 100% per year? Like, so just know that the risk is also very high. So the other question I get is, how can you tell me to invest in 10% per annum, but I can keep naeza fuga kuku?
Yes.
I can keep chickens, and within no time I'll have doubled my money. Yes, you will double your money, but the risk is also there. You could wake up and all the chickens are gone. And that is a reality.
That's true.
So it's a thing of high risk, high return, low risk, low return. So I take people back to, what is your financial goal? What is your objective? And don't say money. Money cannot be a financial objective. What do you want to do with that
money?
So once you figure that out and how much you need, then you know exactly how much to put in the bonds or whether to go into the business.
I like that. And again, fortune favors the brave only.
Oh, yeah.
So if you're scared money does not make no money. And speaking about T-bills, I'm a very huge suspect of the 3 months investment. So I did my first T-bill investment last year, actually. And I invested in the 3 months just because I was scared of the government. So I did my investment and I was waiting for that 3 months, sleeping, dreaming about it, thinking that my money has just disappeared. But the thing about it is I completely forgot about the money. But when the money came, all of it was gone. It met me at a point where my needs were up there. So I ate it all. And then I was like, this was not it. This was not the plan, because I was hoping to reinvest that money again and then continue doing that. So I think you have a very good point there on the short-term investments.
We really need to work on as a country, as investors, our mindsets. Our mindsets are very off. I was speaking to this forum, to this group, and I could pick the tension, the negativity of the minds. Are like, no, we can't invest. They sounded like everyone wants to leave Kenya, like now. And I was like, okay, fine. We want to leave Kenya. Where are we going? Who will take us? You see, this is our country. This is nowhere you're going. Fine. You want to hold on to your money, but you know money loses value when you hold it. And 100,000 shillings in January will not be 100,000. It will be less because the value will have gone down because of the inflation. You can't just hold your money, even the risk.
Yes.
So like, we really need to change our mindset. We're like, oh, where else can we invest outside there? I'm like, okay, fine. You can invest in offshore investments. You can take your money out there. But do you know about the economies out there? Do you know about that country? What do you know about them? So what makes you feel like your money is safer out there?
Yet you've not even studied your own economy here.
Economy to understand it. So we really need to change our mindset, because I don't see anywhere we are going. This is our country.
Yes.
We need to work on it. We need to change what needs to be changed. And we know what to change. We know what needs to be changed. We know where we go wrong. But we can't keep feeling like the government is about to collapse at any one point. The economy is about to collapse. We've felt like that for the last, 2-3 years?
Yes.
And I'm like, you can't live like that. Like you are at the edge at every one point. You won't move with your life. In this economy, so many people are making money.
True.
We're still receiving our coupons for the last so many years. So you can't just sit and wait for the economy to go. It's our country. Can we have some positivity?
Yes.
Let's get our minds right. We can be thinking, oh, it's about to collapse. No. Let's support our own government. It's our land. It's our home. There's no one else will take us.
Yes.
Yeah, you've seen they're chasing us out of other places.
Very true.
It's our land.
Yeah.
So let's work with what we have. Let's change what needs to be changed. But this thing of, oh, we're about to collapse. Oh, we don't have trust in. Come on, where else?
It can't keep on being an excuse.
And tell me, at your money is safe. At you want to hold your money. You can't hold money. You can't. It will disappear as you look at it.
True.
It's a whole, money is a mindset game. I feel like there's a lot of financial literacy that needs to be preached. A lot of it. There's a lot of unlearning we need to do. And to know that you can't hold on to money. And money is just paper. Money is a means. You need to focus on what you need to achieve with that money and stop focusing on the paper. That money is meant to be serving a purpose. Focus on that purpose and not on that money. Don't try and have even money in your bank or wherever you don't. Your goal should not be to open your bank account and feel like, okay, now I have money. You're doing it wrong if you have that money that you keep looking at in your bank account. You're really doing it wrong. The money has to be making money. Even if it's in the bank, it has to be making money and good money so that you can use whatever money it's making. Let money be your slave. Let money work for you. So don't have a goal to just hold on to money. Then don't have fear. Then you're like, okay, it's going to collapse. Have you thought about yourself? What if you collapse?
Yeah.
You collapse and leave the money? How does that work? But you're just thinking of economy collapsing without thinking we can also as well collapse. So a lot needs to be done in terms of financial literacy and in terms of mindset. We need to get our mindset right, and especially now.
And I love that you said that. There's a book I've read, Psychology of Money, that really, really talks about how money is not the paper. It's really not the paper. How you spend everything is very psychological. How you use your money, how you receive your money, and what is the first thing you think about when you get that money is all psychological. So if you train your mind to know what it wants to do with this money, even before it comes, you're able to manage it better. I really like that. So I have my 50,000 here. When am I starting to make my returns? I know we want to make the money as soon as possible. So how soon can I start getting the money back?
Depends. Now, especially when it comes to bonds, the shortest you have is 2 years. The longest you have is 25. Those are the 30-year bond. So again, with the goal, how long do you need that investment? How long do you need the 50K out? So if it's a short term and you just want to invest for 2 years, then you know that you'll receive coupons for just 2 years, then get your money back after the 2 years. Personally, I love long-term investments. So
what is the longest we have?
25-year. So I look for bonds which are 10 years and above. Because you see this thing where we keep saying we need to think of our children as well, not just our own investment. How about the future? In as much as I live for now.
Yes.
And I find bonds very appropriate because I continue making money out of those bonds and eating the coupons. I call them eating the coupons because I'm like, guys, don't just reinvest. Get to enjoy your coupons. Get to enjoy your returns. They motivate you to look for more money to invest. So I look at maturities of 10 years, 20 years. I might not even need the money, but my children will have that money. Of course, 1 million now will not be 1 million then, but you see, I'll have enjoyed that 1 million for all that time. And then they can have whatever it is there. Then I will teach them again how to reinvest, whether they want to invest in bonds or whatever it is. Then I'll just need to teach them how to reinvest that money so they can continue enjoying the children of the money and not the money itself. Do not eat money as a parent. Eat money the children. That is what you consume. So once you learn that basic of that principle of money, don't eat the tree, eat the fruits. Then you'll have this tree growing more and more, and the fruits that it keeps producing, you keep eating. So you can enjoy your coupons. Immediately you purchase the bonds, they pay in 6 months. I mean, the coupon is paid twice per year. So in 6 months, you have your first return. Another 6 months, you get the next return until the maturity of that bond. So you get your money, your return almost immediately.
And how often do they reopen the bonds, or how often can I bid on bonds?
We have a bonds auction every month, every single month. Like right now, we have 2 infrastructure tax-free bonds which are open. One has a coupon of 13.9, the other has around 14% return. That is a very good return.
Yeah,
on a tax-free investment. It's tax-free. And then as an individual, as a retail investor, the tax, this thing of filing taxes, we hate taxes. Gosh, I know we do.
It's about that time.
And we also hate the filing.
Oh, yes.
So it's final. The withholding tax on the bonds which are taxable is final. So you don't have to keep reporting it again when you're filing or filing it again.
Okay.
So it makes your tax work also very, very easy. Because the other thing that is messing us as those things that we learned, but we didn't learn how to apply them practically. Yeah? So the whole of filing of tax is just a mess. Then KRA once in a while just comes to you and you're like, what for? What did I do wrong? I've been filing my taxes, I've been paying. So I find bonds very ideal, very convenient because the tax mess is sorted there and there.
Yeah.
In fact, you don't pay tax, they take away the tax.
Oh, they deduct it.
Coupon,
Okay, good.
deduct it. So they calculate, compute, and deduct. So there's no one who'll come and ask, where is the tax for this? You'll tell them, you took it already. Makes it very easy.
Very easy.
Very convenient.
Yeah, especially for us who go to look for a cyber to file taxes.
2 days to...
Exactly, 2 days to the countdown and hey, you're running around, the system is hanging. Yes. It's chaos. Okay, that's a very good approach to it. Maybe my next question would be, so now I have my money, where do I start? How do I start to bid, invest, where?
So things are so easy right now. A few years ago, we'd have to go for the bonds. You'd have to go to CBK physically to go and open an account.
Hey, it's like Huduma Center.
Who goes to CBK? Like, are you even allowed to go to CBK? And I'm like, yes, anyone can go to Central Bank of Kenya. You're allowed to go there.
I didn't know.
Yes. You know the way they have even cops on that
road?
Yes,
you're like, this is a restricted area.
Yes. So we used to do that, but now we have a digital system, the DAO CSD system. So everything is online. You just need to open an account, download the DAO CSD account. You can get it on the you can download it as an app from the app store, or you can log in on the CBK website, go to the DAO CSD and create an account. You just need your email, your passport photo, your ID, identification number, and your tax, of course, the KRA PIN rather.
Yeah.
Once you upload those, then they open the account and give you a CSD account. From there, it's just investing. There's a bidding process. You bid and wait once they confirm. Then you make the payment through your commercial bank. All these now you can do it. You don't have to go anywhere, including your bank, to even do that RTGS for the payment. So everything is now digital.
Maybe through your experience in investing in bonds, what has been maybe the biggest mistake or something that you learned?
One of the mistakes that I'm not doing, but I see people doing, is waiting for the infrastructure bonds because they're tax-free. And I keep asking, why are you waiting for the IFBs? We have other bonds. And you just need to calculate the after-tax return. Because you could be waiting for an IFB, let's say at 14%, yet there was a bond which before tax was maybe 17 thereabout, and after tax it's coming to above the IFB that you're buying at 14. After tax you have, let's say, 15%.
Yeah.
So why are you still waiting for the IFBs? So I feel like people are doing it wrong, just waiting for the IFBs because they are tax-free. Yet there are other bonds, they're not tax-free, but there's good return because after taxes, these bonds are still giving above 13%, which is a very good return for a passive income, for something that you're not really working for, and which has such a low risk. So it's a thing of, it's a long, slow journey. And if you don't start it or if you stop it midway, then you'll never get there. To me, that's the only thing about bonds. It takes a lot of time. You need a lot of patience. If you're not patient, then you'll buy and get tired or bored of that bond. So it's a long process. It's a slow journey. You need patience. But if you have the goal first, you need to set the goal first before you start, then you'll get there. The other mistakes is, again, not having the goals properly. Put properly in place. So you find someone who's bought bonds, 1-2 years, they want to sell. Now, coming to the market to sell, sometimes you can easily make a loss depending on where the market rates are. There are rates which keep fluctuating that affect the bonds when you're selling them now in what we call the secondary market. So it's painful when I see retailers trying to exit. Maybe someone just bought 50,000 and they want to sell. And I know that they'll sell that bond expensively. And now you have to come and pay the brokers or pay me. By the way, now I'm helping people. I've registered my agency such that I can help people source for the bonds or sell or buy bonds from the secondary market through, of course, a broker. I work with a broker. And it's painful to see someone who just got in because they had, there's an IFB and they got in and now they want their 50,000, their 100,000 out. I mean, it's not the best of things to do. So people need to really understand that bonds is not something you're investing to get your money out. Invest, and unless there's an emergency, and it's a true emergency, don't touch that money. So have your other investments to cater for your emergency. So if we don't know what we want to achieve through the mines and then put the measures in place, then we'll keep struggling, going back and forth, wondering, are we cast? Ama nani alienda na nyota yetu?
Exactly.
Here's this thing of nyota. There's someone who, kuna mtu amechukua nyota yangu. No, it's not about nyota. Just use your mind. You have everything in your head. You just need to have the proper mindset and then lay what the structures in place really well according to the objectives that you want to achieve.
Let me ask a very intrusive question.
Shoot.
What is the most money you've made from these bonds?
Oh, well, I thought I was ready for that.
And tell us the truth. How much? What is the cap that this government can give us that when it gets here, you're not going to get any more? Is there something like that? Or you can get unlimited money out of these bonds?
There's no maximum. You can get as much as you want. Whatever you put in is whatever you get out. The interest is fixed. So I might not mention the figures, but I can tell you I have a bond earning 18.46 per annum. 18.46 is a very good return. Even most businesses don't achieve 18% tax-free per annum. I have bonds, some good volume on that one. So it's a thing of whatever you put in is whatever you make. You can't put in 1 million and expect to be earning 1 million every month. Whatever you put is exactly what you get. So it's all about your effort. Again, it's a long-term journey. 5 years into investment and I'm not yet there. Again, I work with goals. So I've hit my first goal.
For the year?
Not for the year. I had set it for that was 4-5 years ago. I set a goal in terms of I need to be making this amount of money every month. So I calculated back to what amount of bonds do I need to invest to make that amount. So I put it as a goal on my vision board and I was able to hit it.
Yes.
Let me tell you, vision boards work.
They work miracles.
They work. So I was able to achieve it, and now I've moved the goal higher because I've realized
that was
I have to continue.
We can do more.
Do more. So I've raised it. I'm yet to hit my new target, but I know I'll hit it at some point. That one I know I'll hit it. So it's just working with goals and knowing that whatever you put in is whatever you get. There's no magic. There's no, I don't know who is doing what. No.
This one has favor and luck.
Has favor. And for us women, this one has a mbaba.
This one has a mbaba.
You can all forget. Don't tell us you have. It's just a thing of consistency. I think one thing I've been able to master is consistency. So right now I'm having coupons every single month.
Wow.
Passive income coming in from January. When people are complaining of January, I'm like, hey.
You do not understand.
I don't understand where my coupon is coming. And I shout about it. I'm like, my coupon is inside.
So you see it every month?
Every single month I have my passive income.
The group of I'm too young to invest. Talk to them.
Hey, you're too young.
My dad has investments somewhere. I will inherit.
You think you're too young and the next minute you're hitting 40 years. Ask me. Hey, time just flies. And especially when you start off life and you have kids and you have marriage and you have a job or a business, time just flies. There's nothing as too young. When should you start your investment? When you start making the money. Part of that money goes to saving, but don't stop there. Don't stop at the savings. That's savings. Then put it together and get into bonds or real estate if that's your thing, or something else. Fine, you can invest in offshore investments. You can take your money out there. But do you know about the economies out there? Do you know about that country? Do you know? what do you know about them? So
Yeah.
what makes you feel like your money is safer out there?
Yet you've not even studied your own economy
Your own
here.
economy to understand it. So we really need to change our mindset, because I don't see anywhere we are going. This is our country.
Yes.
We need to work on it. We need to change what needs to be changed. And we know what to change. We know what needs to be changed. Hustle for more money. There's no money that's too little. And there's no, it's too early to start investment. And if you're thinking your parents have the money, hey, okay, maybe you're privileged, because some of us, we can sit and say, oh, they have money to tambua. Okay, I have a piece of shamba here. Come to Shags.
Yes.
And start, Wanza Kuchuna, we have coffee. My father owns a
coffee farm.
So yes, a coffee farm. And I'm like, hey, there's no, I'm going to China.
Struggle is not for you.
Not for me. So if you have that mindset, then that could be wrong. I mean, you're put on these ads for a purpose. Why can't you find out what your purpose is?
Yeah.
You can say, because now you guys have the money. What about you? What were you here on this ads? What is your purpose on this ads? Just find out. And once you find your purpose, then you'll make money out of it.
And I think that feeling of waking up every day, feeling like you have a purpose, it just hits different. Let's touch briefly on savings.
Yes.
Sasa kuna maybe wamamas, they're here, they're watching, they're like, now me have been investing in my chama for years. You want to take me to MMF? What is this MMF, first of all? Where do I start? Trying to convince maybe our parents that the bank is no longer safe with our money, or rather is not giving enough returns as you can get from other avenues. It can be a very difficult conversation. So talk to that woman who's really invested in the chamas or even the merry-go-rounds that we see. Maybe you meet a couple of friends and you're like, we can do something together. And then we have a treasurer somewhere. Yeah. Talk to them.
Hey, let me tell you, it's not easy convincing those women. Including my own mother. I've taught her about bonds. She bought 1, 2, 3 bonds. And she went back to her old investment ways. And I was like, you know what? She understands her investment, so it's okay. She loves real estate. She loves rentals. I'm like, it's okay. And they work for her. So it's okay to let our mothers, our aunties, the older generation continue with what they're doing, because change for them is not as easy. It's like even I trying to teach me about cryptocurrencies because I don't understand them. I find it really hard. I'll tell you, let me just stick to my bonds.
Yeah.
Because I understand and the bonds work. As long as they're not doing the merry-go-rounds where you just save and receive money at the end of the year.
Yes.
I just want to tell them that as long as you're holding on to money, it's losing value. That contribution you keep doing and holding for years, it's really not me. It's actually losing money. So the 100K, you might look at 100K, but it's actually less than 100K. Why don't you do the merry-go-rounds? Yes, but then invest in something. Or maybe once it's your turn and you're being given money, why don't you buy just a 50,000 bond and wait? Or if you don't understand, MMF now, that is when fund managers come in to simplify the investments. So they pull the funds together and tell you, okay, we'll keep this money every month, you're earning this amount, every 6 months you're earning this amount. Then it becomes something that they understand more than even the bonds or the bills. So we have a variety of investments. So I know they're holding pieces of land. Yani that one I know.
Oh yes.
That every
niko na kashamba pahali.
Shamba is somewhere. So instead of them continuing with the more shambas, and these shambas will not even help them much, because by the time they're even selling, they're old. At 60, 70, I'm not sure what exactly you want to. You just want to retire in peace.
Yes.
Unless it's meant, because once you liquidify that, now it means you need to use that money. So good investments, if you don't understand, maybe more technical one than bonds, try the MMF. It's simple. Just get a good farm.
What is MMF?
Money market fund. There are many fund managers, or we call them just funds, just organizations which are pulling fund and investing on your behalf, then giving you a return. If you still want your money in your bank, then have your money in in a fixed deposit where you're earning a good interest. What is good interest? Look at where the T-bill rates are. That will give you a clue of what you should be earning. Right now, the 91 T-bill is at what, 9.5%. So when you go to fixed deposits, they won't give you the 9%, but let them give you something close to that, not 2% or 3%.
Just before we close off our discussion, savings, still on the topic of savings.
Yes.
I don't know if it's this generation or we do not have a culture of saving as much as maybe our parents would back in the days. For you, what has been your biggest goal that pushes you towards ensuring that you keep on saving step by step?
Are my biggest motivator traveling?
Oh, yes.
Well, apart from traveling, the fact that I have 2 children that I have to take care of and they're not cheap. Where?
School is not cheap.
We need a whole podcast about parenting.
Parenting.
And in this case, single parenting.
Oh, yes.
It's a whole shoot all together.
Yes.
So the fact that I want them to have a better life than I had growing up, not like I had a bad life,
Yeah.
but I just want them to have a really good life. I want them to see the world. I like traveling with them, to go see the world, so that, traveling really opens up your mind.
Correct.
You just see life in a totally different perspective when you travel. So my main goal being traveling, and knowing that traveling is not cheap, then I'll do whatever it takes. I'll really work so that I can, because I have a target. I don't want to be on survival mode. Most of us grew on survival mode. Yes, you have the basics, just enough, but not sure of if this was to happen, what would happen.
Right.
And like I told you earlier, looking at my mom getting sick and thinking, what? It can all go in a day or two. So it makes me really want to invest, build wealth, create wealth. Again, being in business, which is a high risk venture, but the business is high return, high risk.
Yes.
The changes in the economy just throw us off every once in a while. Sometimes you're like, oh gosh,
it is mentally draining.
It's mentally draining.
Yes.
But then because I need that to be in that space where I'm financially free, that financial freedom to know that even on bad times, I'm still okay. I'm still able to take care of my children. I'm still able to travel. I might need to scale down once in a while. Like this year, I'm like, oh gosh, I need to scale down a bit. But having created that that gives me that passive income, I think is what really keeps pushing me.
Message to your younger self, younger Angie.
Message to my younger self. Don't worry, it's gonna be fine.
It'll be fine.
Yeah, don't worry too much. I mean, it's just a phase, and you'll ace it. You'll get over it. It won't last forever. So don't over worry and miss out on the good times as you're busy worrying. Don't just worry. Things eventually just work out.
I love that. Last advice for our guests.
It's never that serious. Just live and be happy. And whatever life throws at you, just deal with it. Life is beautiful. And we deserve all the good things. We keep feeling like the good life is only for a few people. And I tell them, hey, me, I'm for the good life. And good life.
Yes, like this.
We're tight. So this good life, whatever your definition of good life is, again, we don't all define it the same. But whatever it is that you define as good life, it's for you and you deserve it. It's not a favor. You actually deserve it. You just need to know how to work it with your own mind, and it's all in your mind.
It's all in your mind. Yes. I love it. Thank you so much, Angie. That was a wealth of nuggets of wisdom. I hope you guys were writing down something, but I've learned a lot from you. And I love your journey of just growth. It's been so inspiring just to hear how you started as a young girl, and today you're here looking like a very fabulous woman, being a fabulous woman at it. And just your journey of resilience and authenticity is what sets you apart, honestly, from everyone else. I hope you guys learned a lot from this podcast. And Angie, we'd like to thank you. And before you go, maybe any parting shot you have for us? And also share with us your social media handles, where we can get you, how we can get a hold of you.
So I have 3 brands. Angie's Closet.
Ladies, you can do it all.
Angie's Closet, where I showcase my the outfits for women. I deal with business casual wear and official wear for women because I want to help them elevate their self-esteem through how they look. And I'm on Facebook and Instagram and TikTok on that one. Angie's Closet. Angie on Bonds, my new baby. I have a YouTube channel, Angie on Bonds. I have a TikTok, Angie on Bonds, where I do the short videos, which I also post on Facebook and Instagram. That's Angie on Bonds. And a website as well, still work in progress. Then I have Angela Karaoke, where I talk about my life, where I share about my single parenting journey, my single life journey, and all shenanigans. A lot of them are just shenanigans. But you know what? We need shenanigans in this life because I just love laughing. There's something I love doing, it's laughing. So I do posts and laugh and make people laugh. And we all laugh in a very silly way. And it really helps our days. It's been my go-to place where I go and just have fun because life is too serious. And this closet, it's business. And John Bonds is teaching people on investment. I mean, I also need to go and laugh and talk about life and,
Yeah.
and throw it all out. And that is Angela Karaoke on Facebook mostly. Yeah.
YouTube, we have Angie on Bonds.
Angie on Bonds.
Oh, okay, good.
Yes.
All right. I hope you got that, guys. Make sure you subscribe to her channels, reach out to her on social media, and you can get her number also on her social media platforms. And thank you for watching this podcast. I have been your host, Joy Mido. I have a very great lineup of guests coming up, so you wouldn't want to miss this. So subscribe, comment, like, and share, and see you at the next one.